What do you think Wall Street's biggest fear is right now? I'll give you a hint. It isn't the pandemic for the first time in over a year. According to a Bank of America survey, the number one fear among portfolio managers is inflation. If you've been keeping up with the news, you may have already heard of this. Why are investors concerned about inflation? Should you be? Keep watching for what you need to know on inflation, our economy, and how it could harm your retirement. As we move away from the heat of the pandemic into an economic recovery, inflation fears have risen quickly, triggered by the Fed's $1.9 trillion coronavirus rescue package. The concern is no longer, will we recover, but what happens if we recover so rapidly that our economy overheats? An influx of stimulus money into the economy, coupled with predictions of a post-pandemic economic boom, raises some very valid concerns. Bond yields have also spiked to pre-pandemic levels, recently hitting 1.6% after the crash of just 0.3% last spring. If these yields hit 2% or more, it could very well cause a market correction of 10% or more. We've seen how inflation fears have impacted tech stocks already, which have been riding a volatile roller coaster over the last month. Meanwhile, cyclical stocks are gaining. You may not think about inflation very much, and why would you? Nobody remembers gas prices jumping from 25 cents to $3 overnight. It happens over time. But if you're planning on saving for retirement or are close to retirement, then you should keep inflation on the back of your mind. Over time, inflation will determine how much dollars you saved and invested will actually be worth when you retire. This can seriously affect your nest egg. Simply put, higher inflation, the lower your purchasing power. Even if inflation rates are low, retirees are more likely to spend on things increasing in price, such as medical or prescriptions. According to the Centers for Medicare and Medicaid Services, healthcare costs for elderly Americans are 3 times that of working adults and 5 times that of children. In 2018, healthcare expenditures increased by 4.6%, while inflation averaged 2.4%. Not to mention the expenses of housing, travel, and even supporting your children. So, do you really need to worry about inflation right now? We are living in an optimistic economy. Goldman Sachs expects the US economy to be 8% larger by the end of 2021, the fastest GDP growth since 1965. A majority of investors expect a strong economy to be on the horizon, and almost half of fund managers predict a V-shaped recovery like we've seen. Will our inflation rates surpass 2%? Will we have an outrageous spike in prices with less value to our dollar? It's unlikely, but then our understanding of inflation has grown and changed, and our ability to control it has become much more refined. And modern technology advances have allowed businesses to generally cap prices and wages. A 1970s-esque wage price spiral is likely not going to happen. Now, this isn't to say it won't happen, but there are things that you can do to protect your nest egg from inflation. Our fiduciary advisors at Trajan Wealth have multiple investment strategies that can help protect your portfolio from rising inflation costs. We'll look at your individual situation to create the best plan for you. So give us a call or visit our website. We'd be happy to review retirement income plans with you that limit inflation's impacts on your golden years. So until next time, I'm Jeff Jr. Take care.